Is it possible to make $1 million trading Forex? To answer this question, I will ask two more questions. How much do you think the richest Forex trader has made? You can take a guess. I'll wait. Over $8 billion. George Soros is the richest Forex trader. He's from Hungary and has amassed a wealth of over $8 billion trading Forex. The next question is like the first one, and it is, how much do you think the richest Forex trader in Nigeria is worth? Now, take a wide guess. Over $16 million. Uche Paragon is the richest known Forex trader in Nigeria, and there are others like him, like Namilare, who is just 21 years old and has amassed a wealth of over $5 million trading Forex. So, how do you become a successful Forex trader? It comes down to 5 things. 1. Work with a reliable broker. 2. Diversify your portfolio. 3. Always perform market analysis. 4. Limit your losses. And 5. Have a mentor. I'm going to walk you through the basics of Forex trading in a few minutes, but this is obviously not enough time. So I'll be giving out free tickets to a Forex Masterclass within this video, where 2 top traders will be teaching you how to trade Forex profitably. Usually, this classes cost between $500 to $1,000. It's going to take place via Zoom, so it's online, and the free tickets are limited. That said, let's look at the Forex basics. Forex, currencies and currency pairs, bid, ask, pips, lot size, and leverage. You'll be hearing this a lot in Forex, so let's tackle them. In Forex, we're looking at 2 currencies. Example is Euro, USD. Now keep this in mind. Forex is a global exchange market that allows anyone trade currencies. The market is so huge with over $6 trillion a day in trade volume. The term Forex or FX is coined from foreign exchange. So if you go to the Bureau de Change and buy or sell dollar for Naira or Euro, you have actually traded Forex. That is, you exchange one currency for another currency. But that is one way to trade Forex. There are several others, including currency futures, spot FX, retail FX, and others. Most of us are going to be trading Forex as retail traders, where we trade on our smartphone or computers through a broker. The reason why we trade Forex is simply to make money. Now, I said you should keep this in mind, right? So if I buy this, it means that I'm using dollars to buy euro. I am simultaneously selling USD for euro. It means that I am purchasing a share in the economy of the Eurozone countries. That I believe that the economy of the Eurozone is going to get better than the United States economy. So I'm investing in that economy. If I sell this, it means that I am selling euro and simultaneously purchasing US dollars. That I believe that the US economy is relatively going to be better than the Eurozone countries' economy. Now, stick this in mind because we'll come back to it. There are 8 major currencies traded, signifying some of the world's largest economy. We have US dollars, Euro, Great British Pounds, and Japanese yen taking the lead, followed by Swiss franc, Canadian dollar, AUD, and the New Zealand dollar, making up the 8. We've established that currencies are traded in pairs, and they can be written like this, with a slash in between, or like this, or this, depending on the broker. Euro USD that we have used as example so far is a major currency pair, and there are 3 categories of currency pairs. One is the majors, which are currency pair that contains the US dollars and any other major currency pair. There are 7 of them. The second is the crosses. These are pairs that contains a combination of the major currency pairs without the US dollars. We have the Euro crosses, the Yen crosses, the Pound crosses, and others. The third is the exotic currency pair. These are major currencies paired with currencies of emerging or developing countries. I hope you still have this in mind. Now, let's make it our focus and narrow in. The currency at the left is the base currency, and that at the right is the code currency or the counter currency. As it is written, a buy in this market means that I will use USD to buy euro. A sell means I will use euro to buy USD. In other words, the base currency is bought or sold for the counter currency. When you buy, you are going long or taking a long position. You believe the price is going to go up, so you can sell later and make profits. When you sell, you are taking a short position. You believe the price is going to go down, so you can buy later and make profits. The broker will list this currency pair like this. The price you see here is how much dollar you will spend to buy 1 euro or how much dollar you receive when you buy 1 euro. The price at the left is called the bid price, while the price at the right is called the ask price. The bid price is always lower than the ask price. When you buy, what you pay is the ask price, and when you sell, what you receive is the bid price. You might need a minute to let all this sink in, and I hope so far I'm doing a good job. Now let me know if I'm doing a good job by just smashing the like button. Do that as I know I'm doing a good job. Now the difference between the bid price and the ask price is called spread. In this case, it is 2 pips. Now this leaves us with 2 things to talk about before we end this video: pips and lots. But before that, let me show you how you can get access into the Forex Masterclass happening in a few days from now. 2 top traders are going to be facilitating this Masterclass. One is Nonso FX, CEO of NFX Capital. He has 4 years experience and specializes in Forex, stocks, and synthetic trading via ICT trading method. When it comes to technical analysis, Nonso never misses. We refer to him as the financial guru. The second person is Daniel Obara. He has over 3 years experience as a financial market analyst and Forex stock market specialist. Despite his humble appearance and quiet way of living, Daniel is widely considered to be one of the top Forex traders in Port Harcourt, Nigeria, having taught over 3,000 students. His eloquence when speaking is hard to overlook. Now, from the quality of these persons, you can see that to attend their classes is not free and doesn't come cheap. But what I did was that I reached out to a Forex broker and they agreed to sponsor some persons by giving out free tickets to my viewers. The name of the broker is Windsor. They have been in existence globally for 36 years and about a year in Nigeria. All you have to do to get the free ticket is 1. Sign up to Windsor with the link in the description. 2. Fill out the masterclass form. I will also leave in the description using the same email address you used to sign up to Windsor. If these 2 checks out, then you'll get free access to the Forex Masterclass. So back to pips and lot sizes. Pips and lot sizes are 2 words Forex traders throw around a lot. Today, you get to know what it is. A pip is a unit of measurement to express the change in value between 2 currencies. So what do I mean? Say this is the ask price of Euro USD and it moves to this. Then it has moved by 1 pip. Say it moved to this. It has moved by 12 pips. Pip is the 4th decimal of a price quote for most currency pair, but it can also be the 2nd decimal, especially for the price quote of JPY currency pairs. If a price quote is written in 5 decimal places, then the pip is still the 4th decimal and the 5th decimal is called a pipette. It is actually 1/10 of a pip. The same goes for 3 decimal places. Pip points. Is this clear? Now going back to this, if I enter this trade with $1.105 and it moved by 20 pips and I sold, I will have made $0.002. This is so insignificant. So it makes no sense to trade with $1. Thus, Brokers only let you trade in lot sizes. There are majorly 4 lot sizes. Standard lot size, which is 100,000 units. Mini, which is 10,000 units. Micro and nano. So, trading with the standard lot size for this market is equivalent to trading with $110,500. If it moves by 20 pips, then I'll have made $200. But there's a problem. Not everyone has over $100,000 to trade. And there is a solution for that. The solution is leverage. Leverage allows you to deposit, say, $1,000. We'll call this margin, and trade with a standard lot size. Or you can deposit $100 and trade with a mini lot size, or even $10 and trade with a micro lot size. I hope so far you have some clarity on Forex. You might want to smash that like button. I'll be expecting your comments and questions in the comment section and in the masterclass. I'll see you there.